Well, hello there, people. Those joining us live and those listening to us later. Welcome back to another edition of Tip Tuesday. Last week we talked about entry points, and today we will be talking about exit points. So, before I enter in any trade, I'm supposed to know my entry and exit points. Well, since this is so important to any trade I'm supposed to ever make, it's good that we are covering these things. So, what defines a good exit point? Well, first off, it's exit points plural. Okay, it's exit points plural. And most of us really only think about one exit point. So we're like, all right, here is where I get in, and here's where I'm going to get out once the stock has made this move, and then I'm going to be making this amount of money, and this will be a great trade. And ideally, that would happen, and it would happen quite often. However, we do have to be just as prepared for our stop out as we do for our target price. So I want you guys to be very, very aware of that. We spend plenty of time talking about stop outs. So we won't do a ton of that today, but I do want you to be aware that an exit point is not just simply when it's reached your desired price. It is also when it has not reached your desired price because it's going the opposite way. So we must be aware that that is also an exit point, and it is closing a trade. So if we were to set an automated order once we've entered the trade, it would be a closing position. So if you go in there and you set a stop out, it is a closing position because you are going to be closing that trade for a loss. All right. Very good. All right. So let's spend a little bit time here now just talking about what we want to see in an ideal scenario, right? So what does that really look like? And I'm going to show you some charts. Now, I'm going to be using a different charting software besides um, our charts by Tradeway, mainly because charts by Tradeway doesn't allow me to do um, some of what I need to do with moving back and forth in past dates. So we'll be looking at a slightly different charting software for this particular section. All right, so what we're going to do here with these, and I'm going to try to zoom in because I want you guys to hopefully be able to see a little bit more on your screen. Oh, I think that's better for you guys. We're going to talk a little bit about exit points here. All right, so I'm going to go through. I've got 4 to 5 stocks that we're going to look at. If you guys have questions, I've got my screen open so you can drop those over in there, and I can see that and respond to it. So if you want this to be interactive, certainly can. So the first one we're going to look at is AMAT, which is, I believe, Applied Materials. All right. And when we're looking at this, there's a couple of things we always want to know. One, what's the pattern? What's the market tone doing? And is this stock, this pattern, likely to move in step with what the overall market tone is doing? All right, so as we kind of think through this, we're going to be watching it. All right, so it hit the 50-day, and that could be a time for us to get in if we wanted to, right? Okay, then it moves up. Now, we're going to go back over here, and we're going to get in on the 16th this time. Now, as this stock is moving up, you have to kind of imagine, guys, that we were watching yesterday, and now we're trying to figure out, okay, since we're watching right here at the 20-day. Now, obviously, we missed a play right here on the 10th where we could have gotten in, and that would have actually made a ton of sense to kind of think through this. If we were to buy right here at the 50-day and we were to look for a target to sell, our target to sell is one of two places. And the first thing I want you guys to really hone in on when it comes to an exit point is the previous high. Now, obviously, in an uptrend, we would expect to see higher highs, higher highs, higher highs. But even in an uptrend, we still need to be very aware of the previous high, because if it stalls out there and it's really not an uptrend, maybe it's turning into a head and shoulder, maybe it's turning into more of a roll, but the previous high really matters. So when we're doing bullish trades, previous highs need to be things that we're thinking about. So if we were to enter this trade here at the 50-day, then an exit price would have been right here around 121. You can see a wick here, you can see a wick there. And if we were to see our stock move up into that range, voila. Okay. I mean, look at this, guys. I mean, this is wow. So yeah, we just got in yesterday, but it's already made essentially about a $8 move. So even though we've only been in this trade for 2 days, it's time to take profits. It's time to take profits at our previous high. In fact, that would have been a good place to target. It was, we targeted. We targeted around 121. It's at 121.33 is about where we are now. So it's time to take profits. Now, it drops back down. Good thing we sold yesterday, right? At resistance. That's where we're supposed to sell. Now, the following day, it's going to blow through resistance. How do we think about a trade like this? Well, we know, all right, it's going up. We know it just moved through resistance, but how do we think through where to sell here? Well, let's apply the same information we just had. Let's look back to the left and say, wow, where is the next most recent high? It's 125. Okay, well, let's see what happens. All right, so we get over here and we kind of look at that and go, wow, all right, so it's right there, right where this stock closed, and this stock hit that almost to the penny and started to move down. So not quite 125. The wick made it to 125 there, but we closed right here. The next day, it goes up, it tags that same close, and the professionals start to sell. Now, again, this has turned into a really quick trade, but what do you think we should be doing? Okay, we're looking at a previous high. It tagged that previous high almost on the dot and started to move down. It's time to sell. You might think, well, Geoffrey, what if I want to see what happens the next day? All right, well, it kind of goes up. Oh, oops. And this is where a lot of people go, oh, well, it's a good thing I sold yesterday. Well, did you really? Because yesterday you would have said, if you're not going to sell on this day when it's turning, why would you have sold on that day when it looked like it was going up? I don't think you would have. And so that means you would have been in for this day as it's dropping all the way back down to the 20-day, meaning you're maybe not even making any money on a stock that moved up over $6 while you were in that trade. So you have to be honest. We don't have the privilege of going back and redoing trades while we're in them live, which is why we need to have a good idea of where our target is, and if the stock hits it, to be satisfied with that. And guys, listen, we'll take a look at one example where it blows through our resistance and how we would kind of ponder that and what that looks like and how to think through that. But for the most part, we need to have a plan. If our stock hits our target, then we are okay, and not just okay, but happy to take profits at that place. Okay. All right. Let's go back now and we will take a look. A lot of these are on the same date, 3/16. I picked a lot of them on the same date, 3/16, just so it's kind of recent. And a lot of them were popping up. So it gave us a really good opportunity to look at several at the same time, same time, same similar types of movement here. All right. Now, you might look at eBay and say, Geoffrey, man, this has been in a downtrend. Why would we be looking at this trade? Well, if you guys will notice right over here, that was a pretty strong area of support. Now, we're not entering this trade here anticipating this kind of move. That doesn't make a lot of sense, right? But we are looking at this support area going, wow, this stock is at support again. If it doesn't work, I'll stop out. Okay, so my stop out is just below. So my exit point here is below those lows. If it drops below those lows, I don't want to be in this trade anymore. That thing is showing a lot of weakness. I'm going to stop out. So that's one exit point. But what's my target price? Well, I would say, guys, we know that if this thing is to move up, these EMAs on top, they act as weights to push this thing down. So if it gets up to, say, the 10-day, that red line right there, and it starts to pivot and turn, it could easily start to head back south. So if that's the case, I get a move up here. It tags that 10-day right there. I'm out. Okay. I don't need to stay in past that. So let's see what this particular stock does for us. A nice move up the day after we got in. All right. Now you guys can see here, right? I mean, we are right there. We are right there. Now remember, our target price was the 10-day. Guess what we have just encountered, guys? The 10-day. It's just a couple of days later, but here we are. We've made the move that we anticipated. Here's where we have to deal with our emotions and begin to take some of the emotions out of this and just say, yes, could it keep going up? It could. What was my target price? My target price was the 10-day. If you are to sell right here, that is a great trade. You did what you predetermined to do. Now, what if you say, well, I'm just not sure. I don't know if that was the right price point or I should have stayed in to see the next day. Oh, it bust through. Then, so those of us that sold yesterday were like, Geoffrey, you told me to sell yesterday. I did, right? These people made a little bit more money, but I'm going to emphasize this time. They made a little bit more money this time, right? But we're not trying to create habits on something that can happen sometimes. We're trying to make trading decisions on what's going to happen most of the time. And many, many times this thing would have hit the 10-day and dropped down again. In fact, what you'll see is it gets to the 20 and then it drops off that 20-day. So it actually had a little bit more strength to get up to the 20, but then it fell from there. So depending on how long they were holding it, we could basically be selling at the same point, even going into yesterday. Okay, so a little bit higher this time, but not always, right? And we need to trade off of what the expectation is. That wick right there should have been enough for us to go, yep, let's go ahead and take profits. Even if it goes up higher the next day, we're okay with that because that was our target. We thought, man, that's a great move just to get from here to there. It had a little bit more strength than we thought. Market tone is something we might have considered as well, but really, that was a good time to get out of that trade. All right, we're going to go back a little bit more. We're going to look at Procter and Gamble this time. All right, and what we can see here on Procter and Gamble, I'm going to zoom in one more time for you guys, is just look at all this support, guys. I mean, boom, 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 boom. Like that is a strong support area. Look at our line right here. I mean, so this is a strong support area. And basically, this stock is essentially rolling between about 136 and 141. We'll call it 141, 136, 141. Maybe a little bit lower than 141, maybe 140 and a half. All right, so now we're going to have to make our trading decisions. The stock is going to have to have enough strength to break through EMAs. I know sometimes people think, well, it's a rolling stock. EMAs don't matter. They absolutely still do. And they could absolutely get in the way of this stock going up as high as we thought. So we will be keenly aware of the EMAs and what our stock is doing. The next day, we want to see it turn and go up. It does. This is our entry point. Now we're going to stop out below this low. or that low, that's the worst case scenario for us, I guess. Not maybe the worst, but certainly that's the least we would be willing to let this thing drop, is that low right there. There's no need to lose any more money on it, guys. I know that's not much. That's a small loss, but that's what we're looking for. We're looking for small losses. Now it moves up. Wow. All right. So we were targeting 141. This thing on that day had so much strength, it made it to the 50-day. I hope you guys can see that on your screen. It's very visible on mine. But there is a massive wick right here. Once that stock tagged that 50-day exponential moving average, I mean, it dropped like a rock. Well, guess what? Our target was 141 anyway. The high that day was 141.32. So hopefully we're either watching it or we have an alert set. And so we could run as fast as we can get to our computer and begin to sell out of this thing, because it's time to go. Right. And if we aren't able to get out, guys, I just want you to see that by the time that day ended, not only have we hit our target, but if we didn't get out, the stock is down to 138 and headed back down to where we bought the thing. So we could go from locking in a significant profit, right? I mean, a $5 per share profit to $2. Like losing $3 a share. I mean, we got 1,000 shares. That's 3,000 less dollars we have in our account because we weren't ready to sell. We didn't have things in order. We weren't watching it. Whatever, right? We missed our sell point. That's why exit points are important, because sometimes stocks like this can turn very, very quickly, and we don't want to get caught up in those. All right, one last one here. This is AI. This is kind of a present one here. So 313, let's go to 316 again. All right, so it's popping up off of the 50-day. All right, now what we're looking for here is to realize this could be it, right? So you could just get in here and get out there. That would be something. But if we believe this is going to break through the EMAs, what is our target? And what I would say to you guys is your target, if it breaks through the EMAs, that's showing a lot of strength, is right up around here, 28.50. That's where you're trying to go. See, look at how much it's struggling. Now it broke through. Now we're trying to see it get up there. Now it's struggling, right? And this was even up to yesterday. It's struggling, but we would want to try to stay in this trade. Remember, this is present, until it reached 28.50. There is one thing that we need to make you guys aware of. If the market tone becomes overwhelmingly negative and this stock can no longer push up, that is okay to go ahead and take profits sooner rather than later. Okay. And this could be one of those scenarios where, even though we have our target price, if the whole entire market tone changes, goes negative, and this stock starts following it down, we do not need to let it go down. It may not hit our target, but we don't need to follow it all the way back down to the 10, 20, 50, etc. Go ahead and take your profit. Yes, you didn't get as high as you wanted to, but that would be one example of when we would be willing to take profits sooner rather than later. All right, let's go back here, and we're going to do one last example here, because this one is actually going to break through, and we want to talk a little bit about how to think through a breakthrough. All right, so 316, we're on TSM. Our target is right here around $91. Okay, $91. Now, if it breaks through all these EMAs, could it go higher than that? It could. So let's talk a little bit about what that might look like. Ooh, man, look at that, guys. I mean, it's broke through the EMAs, but it's not really getting on up there, is it? So if you wanted to take profits there, would it make sense? I mean, you're right there in an area where it would make sense. Oh, there's your breakout. All right. So again, if you sold, great. Because again, most of the time we should sell at resistance. It doesn't break through resistance most of the time. Every now and then the stock is strong enough where it can do that. Now that we've been in this trade, let's say we're still in it and it's broken past our target. How do we think through this? A couple of different ways, guys. One is you're going to say, all right, I'm going to wait for the first dark candlestick. So whenever there's more selling than buying, that's good enough for me. Whatever day that is, whatever price that is, if the professionals are selling, I'm ready to get out there. Or you can pick an exponential moving average and say, well, if it drops below this moving average, then it's starting to show some weakness, and I'm just going to take my profits there. That's how we're going to think through that. And then, of course, we have the same idea that we had. Let's look at previous lines, either horizontal or diagonal lines, to give us an idea. Well, if this stock hits this line, I'd be willing to sell there. All right. I mean, so there's a big wick. It goes all the way up to 95. It starts to turn. So if you wanted to sell right here, great. That makes a ton of sense. If you're doing the whole EMA thing, all right, you get another move up. Now you notice, I don't know if you guys can see this on your chart, but we actually hit a previous diagonal line. And I would definitely say, well, then we should have wanted to sell that day right there. Okay. I don't know. It may be too faint to see it on your screen there, but we got really, really close to an old diagonal line, which would have been a great time to sell. If we don't sell, now we're doing the EMA thing. So now guess what, guys? You could have sold here. Could have sold there. Could have sold here. Wow. See, now you see what's happening to you now? Now you're sitting out here going, oh, great. It's at the 20-day. Hopefully it pops up here, and that's to, yesterday. So the key to this, right? We're trying to win big and lose little. The key to winning big is getting a great buy point, letting it have enough room to actually run. But then also, right, we don't talk a lot about this because it's kind of inferred, I think, is selling. Okay. When you have a target price, sell at your target price. Unless the market changes and causes you to get out earlier than you wanted, then sell at your target price. So be patient. If it takes a little bit more time, if it gets there faster than you thought, cool. It's not a problem. That's a yay. So let's treat it that way. All right. So one last thing. How can we get better at understanding target prices? One, drawing lines. If we can draw accurate lines, then that's great. But sometimes stocks don't move within lines. So in that case, what are we looking at? We're looking at previous highs. So previous highs, that's a good target price. If we have a breakout, what are we looking for? All right. Well, previous lines, previous highs, if they have them. If not, we're looking at selling opportunities. When do the professionals seem to be okay taking profits? If they're okay taking profits, I need to be okay taking profits. Therefore, I need to be exiting. So we have our target exit price. We have our stop out. Both of them are exit prices. Before we enter any trade, we need to be very aware of what both of those prices are and then try to stick to them unless something really changes. Thanks for being with us today, guys. We'll see you next time for Tip Tuesday.